you can hold on to the evaluations till the end because you're going to be grading our panels. So if you would just start, you could complete the beginning of it and some of it towards the end, but please wait to complete the evaluation at the end of the seminar so that you can grade the seminar. So good night, everyone.
Good night.
For those of you who are here in our financial education seminar series for the first time, I welcome you. For those of you who have been traveling with us these last 4 weeks, I welcome you as well, and I thank you for staying with us and coming back. It must mean that we're doing something right because I see a lot of the familiar faces. So on behalf of Borough President Adams, I really thank you. This is, I think, a very much needed series. We call it Survive to Thrive. And this is our 4th seminar in the series, our last seminar in the series. Next week, next Wednesday, is our expo, which caps off all that we have done. So I invite you to come back, and as I always do, say please bring a friend and or a neighbor. This is not a best-kept secret. It is something we need to share because we want to make sure that all of Brooklyn's financially fit. So next week's expo, you have a choice of doing it in the morning or in the afternoon. You don't have to stay with us all day. I've been battling with Mike as to if it's come through for a second or come through for an hour. It's up to you. We just want you to meet with our service providers, get the information on financial education so that you could take it with you. Now, I'm dressed like this, so is Mike and Candace, because everyone knows today is Earth Day. And today, some of us here at Borough Hall, we did our day of service. Every year in May, we do our day of service. But we decided that some of us would go out today since it's Earth Day with some of our partners. So I do apologize for dressing down on a Wednesday. I am going to, without further ado, introduce the person who is responsible for these series. We have our financial education partners who are here in the room with us, but the vision of financial education, although I am working with you every week, the vision is the vision of our Brooklyn Borough President. So please put your hands together to welcome Borough President Eric Adams.
I want to thank Sandra, really our Chief Programming Officer, just for bringing energy to the game. Anyone could have a vision, but it really takes the talent to implement and bring folks together. Tomorrow she's doing a Women in Wealth series. I think she's up to about 400 women who are coming in, 700. Good Lord. Last week, while I was, a week and a half ago, while I was in Cuba, she had a program for young people. Well, she had a couple of hundred young people here. So the concept is important, and I thank our panelists for really teaming up with us on this concept. Here's what, and I'm going to allow the panelists to talk about. I just want to share with you my vision and what I saw when I became Borough President. I saw Brooklyn growing. If you look at our downtown landscape, it is changing. Instantly, right before our eyes. I saw the development throughout the entire borough. And as I moved through from my early days in policing in Greenpoint and Clinton Hill, I realized that we are putting so much energy in the brick and mortar. Yeah. We are building structures. And I say, how about building people? Because if you have tall buildings, and we cannot benefit from them, then what is the purpose of building just a concrete and metal borough? And we are putting in a series of things that allow you to say we want to take the popularity of this brand and turn it into prosperity for all Brooklynites. What's the use of building affordable housing if your credit report don't allow you to apply for the housing? Employers are now looking at credit reports to determine if they're going to hire you. What's the use of saying you want to purchase a home if you go into a bank and your credit score is too low that you can't purchase that home or purchase that co-op or condominium or continue to transition? And so one of the areas we're looking at building people is to make them financially sound and continue these series of financial literacy and how we're going to move forward with it. That's our goal. That's our goal. And it is a continuing series. We're moving and bringing our banks to talk about first-time home buyers. We're looking at how do you open savings account. We're going into our schools. When I was a child, I don't know if I'm dating myself, but we used to have these little passbooks where people used to come into the school and show us how to put 25 cents, a dollar aside. I went to my son's college campus at American University, and there were more credit card companies on the campus trying to get him to open a credit card. If we don't teach this financial literacy, then where's it going to be taught? And that's my job as Borough President. My job as Borough President is really allowing you 4 years later, God willing 8 years, to look and say, is my life any better than the time he was in office? That's the question I want to be able to answer, that you can look into your personal space and say, when he was elected, here is where I was, and here's where I am now. Now, I can only bring the information. You have to be willing to embrace it and grow with me and grow with the borough as we evolve to turn the borough into what we want it to be. So I thank you for coming out. Gather the information, share the information. We have great panelists that are here. Let's move towards financial independency together. Thank you very much.
Thank you, BP. BP, one of the thing I wanted to say, you had asked us to have the controller's office here about the unclaimed funds. And when I asked the controller of the Annapolis office, we got Deborah Delan in the back, and so she has been here almost every week, checking our attendees to see if they've gotten money back, and a lot of them have gotten money back. So thank you, Deborah. To give remarks from one of our sponsors, East West Bank, John Pasteur. This series could not have been made unless we had some sponsors, of course, that are here, that gave us the piggy banks, that gave us the flash drives, that gave us the money for the refreshments. So I want to thank Popular Community Bank for their sponsorship, and so as well East West Bank. John Pasteur, please give your remarks.
Hi, I'm John Pasteur. I'm with East West Bank. First, I want to thank the Brooklyn Borough President Eric Adams for bringing this workshop together. Sandra, as awesome, you are completely awesome. Just want to let you know that. One day, if I have become Borough President, I'd like for you to be there. Because it's all about people, and it's easy to make a presentation, but bringing it all together sometimes is very hard, and just talent like Sandra is just incredible. Today's topic is about home ownership. I do a lot of underwriting of home ownership, multifamilies, and one of the things I always strive for people when they're looking for a home, I always say, what kind of home are you looking at? I'm looking for a single family. And I always ask the question, why not a multifamily? Multifamilies are homes that are usually about 2 to 3 residents in one building. Landlords are sometimes they're absent landlords. And when you hear about home ownership today, think about being a local landlord in your community. You know the people, you know the individuals in your community. You are the best landlord ever. Sometimes we see a lot of things on the paper, selling here, I sell a property there, and I sell everything. And these landlords are just like it's monopoly money. But I do encourage you that if you can strive to become a multifamily owner, we at East West Bank, we're committed to that industry. We want local people to own property. We think it's a significant value, and most importantly, they do provide an added value to the community. want to thank you again. Bye-bye.
Thank you.
Thank you, John. So I worked for Borough President Howard Golden. Yes, that's how old I am. I worked for Marty Markowitz, Borough President Markowitz. I now work for Borough President Eric Adams, and I will soon be working for Borough President John Pasteur. I like that. 4 Borough Presidents in my life. The next person to give remarks before we get started, Habitat for Humanity. It is one of my favorite organizations because not only do they help build our community, and that's what we're here to talk about tonight, is building our community, our home ownership base. I've worked with them in the past in going out and doing a day of service as part of my job here at Borough Hall, but it's always rewarding. So I want to ask Michael Verdi to come up and give some brief remarks.
All right, thank you, Sandra, and thank you to the Borough President's office and Eric Adams. Michael Verdi, Family Services Associate with Habitat for Humanity in New York City. Just here to talk about a first-time homebuyer opportunity that you could apply for with Habitat for Humanity in the 5 boroughs in New York City. We build in all 5 boroughs. Once you're at that point where you're ready to become a first-time homebuyer. So we do have credit requirements and there are income requirements. All of that information is available on our website. And we have monthly information sessions which are held the 3rd Thursday of each month at our office in Lower Manhattan, just over the Brooklyn Bridge. But we are also starting some other initiatives as well, specifically for people that are declined for credit from our program. When we have housing stock available, we just broke ground on a project in Brooklyn on Dean Street and Mother Gaston Boulevard. It's going to be 15 condos for families between a household size of 2 and 6. And we're going to be able to reach a full area median income between 50 and 80% of area median income, which essentially, to give you a rough idea of what that is, for a household size of 2, you're looking between $34,000 and $55,000 gross household income, low to moderate income families. But even if you get declined from our program when we have housing available, we have a program called Pathway to Partnership, which we just started this past year. And it's for clients that get declined specifically for credit and for debt. We work with our community partnerships, such as organizations like Bridge Street and NHS, and also Neighbors Helping Neighbors, Fifth Avenue Committee. Lots of different financial counselors and different organizations that'll help you address the specific needs that you have in order to be eligible for our program and take advantage of a first-time home ownership opportunity. So again, my name is Michael Verdi. All my information is on a table on your way back out of the office, and also you might have gotten it on your way in. We also have a bunch of different political initiatives for 2015, and I encourage you to take one of those pamphlets on your way out. Good luck with all of your financial journeys, and I hope to see you applying for our program soon.
Thanks, Michael.
Thank you, Michael. One other awesome thing about Habitat for Humanity, they have a program called Restore. You can donate your gently used items, not clothing, right? I don't think you do clothing.
Furniture and clothing items.
Furniture, right. And you donate, and they sell them back at a very, very reasonable price. It's not overpriced at all, and that money goes back into Habitat Humanity building project. I understand that pretty soon you're going to come to Brooklyn with one. You'll open a store in Brooklyn, right? Yep.
We are opening our first store in Queens. Our second store is hopefully going to be in Brooklyn, but our grand opening for Queens ideally would be in the next couple months.
We'll promote the one in Brooklyn when he gets here. You know, I get up here and I get a lot of thank yous for doing this, but I could not, definitely couldn't do it without Mike Mutal. And Candace Julian, who's probably running around, and you guys know Candace. So I thank the both of them for working with me. So I think we're going to go into our presentations. It's about time we get into it, right? And again, we have some of our wonderful partners in the audience who come to us every day. Pedro Barry from Operation Hope. Thank you, Pedro, for sticking with us every week. Imelba is also here from Bridge Street. Imelba Rodriguez. Imelba is our moderator for this evening. This is her panel, so I will let Imelba introduce the panel and work with you guys. Thank you.
Thank you. Good evening, everyone. I'm so glad to see such a big audience. How many people have been here for the whole series? All right, see, we got some dedicated people, Sandra. First, before I even start, I just want to say another thank you to Sandra and her team. Without her and her team, we would not be able to have this financial series. So let's give her another hand, please. So now you're getting a lot of love, Sandra. Excellent, excellent. So for tonight, we're talking about achieving and preserving home ownership. A lot of people, the reason why we're the last panel is because we want to make sure you got all the information you needed to build your credit, make sure that you got your budget together, make sure that you understand the difference between budget and expenses, because a lot of people might think that that's all in one. Understanding how to read a credit report, all those nice things, and also making sure that your youth are involved in their financial savviness, that it's not just about the adults, but making sure this is a family affair. So when you're looking to purchase a home or you're looking to continue to preserve your home, it's not about just the one individual who's in the room. It's about all the individuals who will be able to be impacted by this purchase or who are impacted by keeping this home. So tonight, like I said, achieving and preserving the home. We talk a lot about achieving the dream, achieving that home ownership. Everybody thinks about, once I've got that home, I've landed. I've made it, my dream come true. And hopefully, if we get some money from the back, that will help in achieving that dream faster. But before we go into those achieving that dream, we need to have advocates. We need to know more information. We need to be sure that this is something for us. A lot of the times, people always sell us on purchase the home, purchase the home. But is that the right choice for you? Is that something that you as the individual should take on that responsibility? Being a homeowner is a big responsibility. Not only is it being a big responsibility for someone who's a single family homeowner, but someone who's multifamily, right? I heard earlier, get the multifamily home. That's great, but think about the headaches that come with that. And let me ask the headaches. Think about the responsibilities that come with that. There might be some fruitful pieces to it in income, but there's also some responsibilities to that. So tonight we're going to talk about the goal of achieving it through our Clarence Cleves, who's our homeownership counselor for Bridge Development Corporation. He's an advocate. He's someone who's going to be there on the neutral side. We have our banks, and we have our real estate professionals, and they all have vested interests. But the advocate is what you need in your role, right? When you're looking to purchase a home, you need that advocate. And I do want to step back for a second. Bridge Development Corporation, along with NHS of East Flatbush, we provide free services, free counseling services for both people who are looking to buy a home and for people who are looking to preserve their home. So that's something that we don't have a vested interest in money. We have a vested interest in making sure that you make it to the end of your goal, if it's going to be achieving, buying a home or keeping your home within your family. Our other panelist tonight would be Masana Johnson. She's our homeowners manager for Bridge Development Corporation, and she's going to talk about preserving your home. A lot of times when we get the home, like I said earlier, you get that multifamily or that single family, and you're like, the roof caved in, or the, repairs occurred, or floods, or all these other things happen. But we forget emergency funds. We think about, somebody else is going to give us that money. Maybe we could borrow some money to get that fixed. And sometimes use the money that you need to pay your mortgage with to help you, get through that difficult crises. Or maybe you lost your job, or something happened that was not planned. So for us, we talk about foreclosure prevention. How do we prevent foreclosure from happening so that you can continue to have that dream in your life? The same thing now with Elizabeth Malone, who's going to be speaking about continue to preserving your home, but about insurance. It's important to insure your home, right? We had a lot of things happen around Sandy, and a lot of people got into crises. They weren't prepared for their basins being flooded. They weren't prepared for losing income, and they weren't prepared for the increase that's about to come or has come in some ways on the insurance. So how do you learn more about that? And as you're achieving that goal, thinking about that and putting that into the equation of your budget and your maintenance fees that come along when you're owning a home. And she's also going to talk about other services in regards to landlord training, along with maintenance programs that are available for homeowners through NHS of East Flatbush and other NHS offices to be able to preserve that home. So without further ado, we're going to start off with Clarence Cleves, who's going to talk about the art of, I'm sorry, not the art of, but achieving that dream of homeownership. Thank you.
Thank you.
Good evening, everyone. Can you hear me? Good evening. Hi, my name is Clarence Cleese. I'm the homeownership counselor at Bridge Street. I'm going to talk about today, are you ready to buy a home? I'm going to talk about the homeownership team. I'm going to talk about the steps in becoming a homeowner. And isn't owning a home right for you? I'm going to cover that today. And first, I'm going to start off, what's the benefits of owning a home? One of the benefits of owning a home is stable housing. When I'm talking about stable housing, I'm talking about the principal interest does not go up. A lot of people feel that their mortgage is going up today. It's not the mortgage that's going up, it's either the insurance or the taxes are going up. So people don't understand, it's not the mortgage, it's the taxes and insurance going up. And when I mean stable home, that means the mortgage would be the same across the board for the 30 years or how long the term of the mortgage loan. Also, tax benefits. When you own a home, homeowners don't pay full taxes because their taxes are discounted because you don't pay taxes on the interest in your property taxes. It's all about itemizing your taxes when it's time to file your taxes. So as a homeowner, it's good when you do repairs, save receipts, because you can take that to your accounting and they can deduct that and you can get some of that money back at the end of the year. So it's a good thing to keep receipts when you own a home. Also, equity. I'm talking about all advantages of owning a home. Equity. Your equity, when you pay a mortgage, your mortgage every month, you build it, it's like building a savings account because you know as time go on, years go on, you can borrow against their equity to take a loan out. You have to pay it back, but it still is like a savings account. It's money that's put in the bank for you. But while you're also building a savings account, you're also building towards your investment, your home. And also, owning a home, when you own a home, you make the rules. You control your environment. You can do whatever you want in your home. When I say do whatever you want, I mean live like you want. It's not allowed for you to build on your home. Certain things you got to get permits on your home. A lot of people build on their home without permits, and then when it's time to sell, they can't sell because they come out and appraise the home as it originally was. So watch when you buy your home, how you build on your home, because some things you need to get architect, and it's all about so watch what you do, because just because you build on your home don't mean it's going to bring the value up in your property. Keep that in mind. Building in your home, there's no need to buy a home for $300,000 in an area where the value of the homes are down because you building all this money, you put millions of dollars in this home. But when you go to sell, you can't sell that house for $1 million. So watch what you spend, how you spend on your house. Know the value of your house because that's what you are able to sell your house based on the value of your home. Okay, stability. Owning a home, you get a sense of security. It's a feel of comfort. So owning a home, you know it's mine. Nobody can take it from you. Keep in mind, you don't own a home until you pay the last payment 30 years. You and the bank own a home. Until the loan is paid, you are partners. It's not that the bank, if you don't pay that's why they have the right to come take the property if you don't make your mortgage payment. So keep that in mind. You and the bank are partners into the house. You got the title, the deed in your hand. The disadvantages of owning a home, the monthly costs. Now today, one of the disadvantages, today they say normally you pay more for a mortgage than rent, but today, I think it might be equal. So that's my assumption. It's about equal. But at least if you're going to pay a higher payment, at least you're paying for something that you're going to own eventually. So that's one of the advantages of owning a home. You're going to own it. Disadvantage means you're paying the same much as the rent. And when another disadvantage, there's no guarantee that the value of the home is going to go up. It can fluctuate based on the homes in the area that you are in. That's one of the disadvantages because you don't know the fluctuation, how the market is going to work in that year. Maintenance and repair. When you own a home, as a landlord, you are responsible to do all repairs. Now, when you're renting a home, your landlord is responsible. That's another disadvantage. You know, owning, you responsible, renting, the landlord is responsible. But they also can tell you what you can do and what you can't do in your home. Okay, now we're going to talk about the steps, the process of buying a home. When you're buying a home, I urge everyone, and the banks today are, this is one of the questions they will ask you today. Have you took a first-time home buyers class? This is one of the questions they will ask you today. I urge everyone, please take advantage of these home buying classes. In these classes, the counselor, the advocate will teach you how to manage your money, how to save, how to build your credit up, how to select your home, and how to find the right mortgage that's for you. They will give you the tips on how you go about to do those things. Because always, you know, knowledge is power. Knowing is better than not knowing. Also, we'll show you how to determine how much you can afford to buy a home. We know when you're buying a home, how much you can afford to pay. The way you do that is by analyzing a realistic budget. Remember this word, realistic. The key word, realistic. Because when you're doing a budget, if you ain't being real to yourself, you're not going to do yourself no justice. So you got to be realistic. And keep in mind, when the bank approve you for a mortgage loan, they approve you based on your gross. We don't bring gross home, we only bring net home. So please keep that in mind. Also, next step will be meeting with the lender to be pre-approved. There's a difference. Now, you can go to the bank. Some banks will give you pre-approval, and there's also a thing called pre-qualifying. Okay, I'm going to explain the difference to you. Pre-qualifying is the bank is just going to take verbal information from you based on your income and tell you how much you can afford to pay based on your income. They don't pull your credit when they pre-qualifying you. The minute they ask you for your Social Security number, they're going to be pre-approving you. Pre-qualified, they don't want your Social Security number. Pre-approving, they do. And when you're trying to buy a home, keep in mind, you want to determine what do I want in my home. Keep in mind, needs and wants. Remember, when you get pre-approved, the bank is telling you how much they're going to loan you. Now, when you look for this home, look for a home based on your needs, not what you want. Needs is something we need today. Once we can get billed on down the line. So remember, the bank is giving you the money. They're telling you how much we're going to give you. Base your property search on needs, please, not wants. You fill your home with too many wants. When it comes down, you got none for your needs. And when you're looking for a property, go to these open houses, these open homes. Do 2 and 3, 4 and 5 in one day so you can be able to compare. As you go to these open homes, take notes. What you like, what you don't like. It's going to help you determine. Don't think you're going to go to these open homes and find the perfect home. There's no perfect home here because my lifestyle may be different from your lifestyle, so you might not like what you see. So buy the home and build it to your liking. Don't go say, I need this, I want this. You'll never find a home unless it's built from the ground and you got the architect to build it for you the way you wanted it. Don't go looking for a property keep your mind open. Because I deal with people and their mind is straight, and they still looking for homes, and it's 4 years from now. Okay, that was shopping for a home. Now we're gonna talk about, once you find that home, you're gonna make an offer. Once you make that offer, make sure you put in that offer note, because it's an offer contract. And make sure you put based on the findings of the inspection, your offer, meaning that you're gonna make an offer, because now, sometimes you can make an offer on a property that you don't even know what it looks like in the inside. That's why I'm telling you to make sure you have the clause in there based on the findings of the inspection, being that once you go make the offer, they're gonna allow you to go in the house and look. Once the inspection come up and the inspector finds something, then negotiate that part. I'm saying based on the findings, that's a negotiation point. Just because you make an offer, you don't have to stick to it because you got that clause in there based on the findings of the inspection. Make sure that's in there. I'm saying it because I want people to make sure that's in there. A lot of people get caught with that, and they don't have that clause in there. Also, once you make that offer, you went through the inspection, when you get the inspector, please, a licensed professional, not somebody on the corner that fix homes that you know. Spend a little money, because buying a home is going to be one of the biggest investments, one of the biggest purchases you will make in your life. And I hate for you to buy a property and you get stuck. Because I have seen people buy homes down the line, they didn't get inspected, they know somebody, they had them do an inspection, and down the line, the floor puckled, and now they're trying to get the house fixed and they can't do it. And now the city got all these violations on the property, and they got to get it fixed. They don't have the money to get it fixed and pay the mortgage too. And after a while, the city could call your house abandoned, condemned, because it's not safe to live. Then you have to move out. But you're still responsible for that mortgage, even though you got to move out. Okay, once you do that, you got the professional inspector, now you're going to go and apply for the mortgage loan itself. And this is when the lender is going to ask you for your income, where the savings come, where your savings are for the down payment. How's your credit? They're gonna pull all this information from. Now, once you get pre-approved and they tell you how much you're gonna spend, please don't go buy a new car next week or 2 months later, because that's gonna put you in a different ballpark, because your debt is gonna change. Because the minute they ask you for pre-approval, the same documents they ask you for, they're gonna ask you for when you apply for that mortgage loan to see if anything changed. Okay, once we do that, we're gonna do home insurance. Please, put insurance on your property. Let's get good insurance. Let's go to an insurance agent and get good insurance. Insurance is going to protect your investment, because the bank is gonna make sure theirs protected. You gotta protect you. I hate for you to do an offer, you go into a closing now. You got to have insurance on your property. Please, don't talk about, well, the bank got insurance on the property. No, get insurance for yourself, because you're gonna put down payment money down, and a lot of people lose their down payment money. Yes. You can lose your down payment if your steps are not right. Please, get the insurance. I hate for you to be at the closing and down the street your house is on fire and you got no insurance, then you stuck. And make sure when you do an inspection, please go with the inspector, take notes. You buying a house as is. See this pretty chandelier? make sure you notate that chandelier like that in that property, because people do go back after you do the inspection and take these things out and put cheaper things in there. As is. And then you go into the closing. And when you at the closing, you got to get an attorney. You're going to have an attorney way in the beginning of the process. But make sure when you go to this closing, you understand what you're signing. Understand what you're signing. Make sure the numbers you contracted in are the same, because sometimes numbers changes. So you got to look. You need to know what you're paying for. Understand your mortgage. Because once you sign, there's no turning back. Please sign, fine print, magnify, please sign, ask questions. No question is too dumb when you're spending $500,000, $600,000. No question is too dumb. Sometimes you just don't know. This is why we have a lot of homeowners today in the situation they're in, because they didn't understand how the mortgage worked. Please do yourself some justice. Take these classes. Take these classes. They used to be free. But some of them are still free, but take the classes. I'd rather for you to pay now than pay later, because you're going to pay triple times later.
Pretty much.
Take the classes. The classes are free. Most time when you take these classes, you're just paying for the materials and the credit report. The information is free. You're just paying for the credit report and you're paying for the materials. That's all, the book. Because normally when you take these classes, you're going to get a book, and a book is like a Bible. It will walk you right through the door as well. But sometimes the book is not going to tell you details a person going to tell you. The book is standard. Okay, I'm going to wrap it up. I got 5 minutes. So when you get a mortgage, it's a thing called PITI, which is principal, interest, and taxes and insurance. Sometimes mortgage insurance, which is PMI. Understand there is also grants out there to help you with down payment assistance. Bridge Street is having this home buyer series, which is going to be the 13th and 20th of June. And we will have banks coming and speak about the mortgage, understanding mortgage. In that class, we would talk about the 4 C's of credit. And if you pass these 4 C's of credit, you will be approved for a mortgage. And the 4 C's of credit would be capital, capacity, credit, and collateral. Capital. The capital is how much money you have to put down on your property. They're going to look for that, where your down payment money coming from. The capacity, meaning how much you can afford to pay monthly for a mortgage. These are the things they're going to cover. Your credit, of course, today your credit your credit score needs to be 640 and above. Remember, there's different types of mortgage products out there when shopping for a mortgage. You got the conventional mortgage, you got the FHA mortgage, and you got the Sunny Mae mortgage. And coming to the class, we will break what all these mortgage entails. We'll get deeper into details. This is just a bit of information, but once you come in, we'll give you the meat. This is just the bread. We want you to get the meat of the information. And collateral. Banks also look at how much is the property you purchased, how much it's worth, because they need to make sure they're going to get their money back, because it's all about them making their money. And please do check your credit report. Make sure you check your credit report. You know, you're allowed to get your credit report once a year at annualcreditscore.com. Don't put the free in there, because freecreditscore.com is not the free. It's not free. Annualcreditscore.com. Please look at your credit. As a way, you need to do, look at your credit. Look at TransUnion January. Look at Equifax 3 months later. Look at Expedient 3 months later. You want to keep up with your credit. Also, debt and expenses are two different things. Keep that in mind. Mortgage are based on gross income. Do yourself a favor. Base your mortgage payment based on what you bring home. Thank you.
Thank you, Clarence. So I want you guys to just hold your questions. We're going to hold the questions to the end when all the panelists speak. But he did share some, he dropped some jewels, as they say, and so I hope everyone was taking notes. And at the end, you'll be opportunity to ask your questions and get some handouts. I did want to mention, just a shameless plug for Bridge Street, we are hosting our Home Resource Expo on May 30th, and that takes place at Restoration Plaza. And the Comptroller's Office will be there as well. She's not in the room, but to also offer some unclaimed funds. But moving right along in this panel, our next person would be Masana Johnson, the homeowners manager for Bridge Street Development Corporation, and she'll be talking to you guys about preserving the dream once you achieve it. Thank you.
Thank you. Hello and welcome. So, I guess I'm discussing foreclosure. I hate the word foreclosure, and I know a lot of clients hate that word foreclosure because foreclosure is the stigma of if somebody say you're in foreclosure, you're automatically going to lose your home, and that's not the truth, right? Foreclosure is a whole process. It goes from the beginning. It goes from a missed one payment to could be 3, 4, 5 years down the line, you're losing your home. So it's a process. So I've had clients in the past 7, 8 years come in to see me and said, I missed one payment, I'm losing my home. That's not the real deal. That's not the process, and it's a longer process. Fortunately for New York State, it's a judicial state, so the process is much more longer than if you're in Florida or Atlanta, the process is much shorter. You lose your home within 6 months in Atlanta and Florida. Compared to New York, I have clients who are 4 or 5 years behind and still live in a home. So it's a longer process. So when you hear foreclosure, don't get scared of saying, oh, I'm in foreclosure. That's really not the process. It's a longer process in New York State. Clients that have property, what I've always said, you miss one payment, don't panic. The first thing you should always do is reach out to the mortgage company or mortgage servicer. If you sit down and say, I'm not going to respond to the letters or I'm not going to open them, it makes it much more difficult. They have the right, and it's the law that they have to assist you if you're behind in the mortgage payment. So that's the first thing. If you fall behind, you know you're going to fall behind, you know that something is coming down the pipeline. Their preventative method is, if you know that you're going to be behind, contact the bank immediately. Don't wait. The situation that we're seeing is clients are coming in and they're already 2 years behind. Unfortunately, 2 years behind is it's much more difficult if you're 2 years behind, right? If you're coming at 1 month behind, then it's faster for us to get this done and take it over and you could go on with your life. But clients are coming in 2 years, they're stressed out, they don't know what to do. A lot of clients that are coming in, they already have all type of medical condition because they're so stressed out, because they wait two years to just open that envelope or just come in and contact us. The Center for New York City Neighborhoods is an organization within the city that assists us. If you dial 311, they automatically forward you to an agency like Bridge Street that you could come in and sit with a foreclosure counselor or homeownership counselor for free. It's no charge. We're open every day, Monday to Fridays, and we even have workshops on Saturdays to help clients. So you could always walk into these agencies if you just dial 311, rather than just not open the envelopes or not respond to these phone calls when you're behind on the mortgage payment. I know that the New York State Attorney General has this huge initiative, and I'm so excited to be a part of it, where we've come up with a plan for stop foreclosure scams. Foreclosure scams is someone comes to your house and say, we're here to help you. They tell you it's $3,000 upfront or 15% of the mortgage payments. Once you make that payment, there's no guarantee that they could help you save your homes. I've had clients with terrible experiences because they pay $3,000 up to $10,000 and they still lose their home, right? Because they're going through these people who are scammers. You see them in the neighborhood that you live in. I've seen them walking around in the neighborhood. I live in Harlem, but I used to work in the Bronx, and they're around the corner of every low income or the minority neighborhoods. They says, oh, foreclosure, we could help you with foreclosure. And they're not lawyers, and they're just somebody that says, oh, we could do this, because it's a business. If I'm paying you $1,500 just to walk into my door, that's a business. And there's 500 clients coming in within that year, that's business, right? But I get a lot of clients also ask us why these individuals know where our addresses are. Unfortunately, when you buy a property, your information becomes public. There's nothing we can do. The Attorney General cannot do anything about it. The President cannot do anything about it. It becomes a public information, so they could go to the courthouse and research this information. They could go on a website called Zillow.com and get your address. And when you go to Zillow, they could tell you that this property is behind in the mortgage payments, or they're going through the foreclosure process. So there's nothing we could do about it. That's how they get your information. If a bank does not send a individual to your home to request foreclosure documents, bank does not do that. The bank requests, based on the law of New York State, they usually send you a list of agencies that assist you, and those are the agencies that are required by law to assist you. Do not sign in the documents when somebody walks into your home saying, we're here from the Bank of America or Wells Fargo. Do not sign in the document, because the worst part, like Clarence says earlier, signing that document, you agree to whatever they're gonna do, right? You agree to them going to your bank accounts, you agree to them pulling your Social Security, you agree to them pulling your tax returns. So be careful that any document you sign, before you sign anything, you agree to anything, please contact either 301 or walk into any agencies within the 5 boroughs that offer free service in regards to foreclosure prevention. Next thing is, I like this part of, it's still your house. If you're behind on a mortgage payment for 3 years, it's still your house, right? The only way that this property does not belong to you is that you sign it off. You agree that even if you go to court and you're losing your home, you have to sign off, say I don't want to deal with this property anymore. It's still your house. So I always tell clients, what we see a lot with clients is they're behind in their mortgage payment, they stop fixing the yard, they don't turn the lights on, they leave the garbage at the front. Those are like violation against the mortgage itself when you sign that note. So even if you're behind in the mortgage payment, still do the same thing you was doing before. I've had clients who walk away from the home or they move to a different state, and once the bank, they do this thing called a drive-by. I've get clients who say, Miss Johnson, why is it somebody's coming and taking pictures? Unfortunately, they could do that. They're just checking to see if you're still living in the property. If you're not cleaning the yard and you're not removing the garbage, they could come in and change the locks. Unfortunately, they have that right to do that because they're thinking that you abandon the property, so you have to just continue servicing the property the way you were doing it, turning on the lights. Even if you work late, you're going on vacation, turn the lights on, do the lawn, remove the garbage, continue doing the same thing you were doing, even if you're 3 years behind in the mortgage payments. Unless the judge says this property no longer belongs to you, continue doing the same thing you were doing. Because once you leave that undone, then it becomes the abandoned issue. The next thing is insurance is that big conversation. Everywhere you go, the insurance, and we're gonna talk about that again, but insurance is always a big thing. If you're behind in the mortgage payments, if you cannot pay the principal in the interest, always pay your taxes and insurance. The New York State do not care what your situation is. We just get the list of, the list just came out where taxes of tax liens. And Brooklyn has one of the highest numbers in the state of tax liens. Homeowners are losing their property because of taxes. Just because of taxes, you could own a property for $1 million, and the state could take that property away from you for $5,000. just because you don't pay your taxes. So even if you're behind in the mortgage payment, pay your taxes and insurance. That's the most important part of the whole process, is the taxes and insurance. So continue making those payments, even if you cannot pay the mortgage payment. That's the biggest thing for us. And also, even if you cannot afford, say the mortgage payment is $3,000, you can afford it $3,000 monthly. If you can afford $500, save that $500, because that's the biggest thing. We have clients who are 4 or 5 years behind, and they have zero save. The bank, before 4 years ago, the bank were saying, okay, send in the bank statements, or sometimes they were doing a modification with, or any kind of workout option without a bank statement. Now the bank goes line by line. And that's part of my job, part of Clarence's job, you know, to go line by line. And unfortunately, we have to ask the tough questions. And we've had clients who go to the casino every week. If you're 3 years behind or 2 years behind a mortgage payment, the bank is going to say, what is more important to you, either the house or the casino? So, you know, we have to just pick and choose our battles, right? If you want to save this property, you cannot afford the $3,000, you can afford $1,000, save that $1,000. And I've got clients who says, oh, the bank will come and take my money. The bank doesn't have the right to go in your bank account, right? We question the bank accounts, we question the income in the bank account, but that's an explanation, that's part of our job. We get to send those explanations, we get to have that conversation with the bank, because those are our job to negotiate on your behalf. So always, any money you have, save the money. If you cannot afford the full payment, just continue making the savings so we could have a better conversation with the bank to say, you know what, they cannot afford $3,000, but here's $1,000 they've been doing for the past 6 months. This is what we want the mortgage companies, the mortgage payments to be. And those are questions, those are things that we've got achieved, where I've had clients who had the mortgage payments cut in half. I've had it cut in 3/4 based on, you know, the property value. So it's that conversation. The person that's working with your housing counselor is your best friend. The conversation we have, it's a personal conversation. We don't discuss it with the bank. So I'd rather you telling me everything than you call this multi-billion-dollar company and tell them everything. Because at the end of the day, that person on the phone doesn't care about what your situation is. They care about when you're going to make the payments. So have a relationship with the housing counselors. Those are the best. That's the best thing I could say for you, is have a conversation and have a good relationship with housing counselors. They give you the best advice. Thank you.
So thank you, Masana. So the one tip now is relationships, right, with a housing counseling agency, and that's what you have here tonight, 2 housing counseling agencies that offer free services. The foreclosure counseling is also free, and it's also confidential. So the goal in in our organizations are that we're the advocate, we're the front lines, and we're here to service you, and we don't have no vested interest, only but just to help you through this process. So now you heard about achieving the dream, about what you don't want to do with the dream, right? You want to keep that dream going with the property. But then let's hear from Elizabeth Malone in regards to how do you maintain that dream? So it's easy sometimes to obtain, but how do you maintain so that you won't fall into those conversations with Masana and Clarence and other organizations in regards to foreclosure?
Yeah, thank you. Hi, I'm Beth Malone from Neighborhood Housing Services of East Flatbush. I work out of our Canarsie office. Primarily, though I'm all along the coast and into East Flatbush on a regular basis. There's a reason why 2 of the speakers out of the 3 are talking about preserving home ownership and maintaining home ownership. Organizations like NHS and Bridge Street and PAC and Fifth Avenue Committee, Neighbors Helping Neighbors, are committed to home ownership because we know that it stabilizes neighborhoods, and we know that it stabilizes families, and we know that stable families and stable neighborhoods become economically viable, remain economically viable, and build generational wealth. We do not play flip this house. Okay? We do not look at real estate as an investment to build immediate wealth, rich dad, poor dad. We're not doing that. All right? We are looking to make an investment in the neighborhood for people who want to be neighbors. And that's why we talk a lot about making sure that you remain neighbors. That's why when we look at your finances, we look in detail at the realities and say no. You cannot afford this. We don't want you back in our foreclosure counseling. Okay, we want you to come through for homeownership and then come back for the services that help preserve homeownership. We have had conversation this evening about multifamily houses, and that is a lot of our housing stock. For one thing, we are a city of renters, 67%, and the small landlord, the 2 to 4 family home, is the mainstay of most of the neighborhoods we serve. Canarsie, East New York, all through central Brooklyn. This is the 2 and 3 family home is how we live. One of the things I do at NHS is I teach our landlord training class. We're HUD certified, and as was mentioned earlier, these HUD certified educational courses are necessary for you to qualify for certain grants and loans and certain types of assistance. But that's not why you should take them. You should take them regardless of what you qualify for, because it has been proven that when you are an educated buyer, you simply don't foreclose. Okay? Someone who has been through home buyership education and counseling at the height of the foreclosure crisis, the foreclosure rate for educated homeowners was 2%. Okay? And could be mostly attributed to health issues, by the way. Anyway, like I said, one of the things I do is do the landlord training, which I would encourage people to take, not because you need a certificate, but to take because you need to understand how big of change this is going to be in your life, to go from being a tenant to being actually a job creator. And the job you're creating is your job as a landlord. It is a business, and you need to understand the business you're getting into before you sign a contract. Okay, I can't tell you how many evenings I have watched the faces around the table at the landlord training class go as they found out about things like the rules in New York City around leases. Okay, when you're under 6 units, you have a very different life than multifamilies, the larger multifamilies. But there are still regulations in the city of New York regarding leases. You're still subject to the Fair Housing Act. And the way people most ordinarily violate fair housing and discriminate, they post the notice for their apartment in the church bulletin. That's religious discrimination. Did you know that? You're subject to fair housing laws on that. There's misunderstandings about, family size and what you can do about what is your reality in terms of what you can and cannot do as a landlord legally in the city of New York. The trash, okay? We got rules about trash. We got rules about sidewalks, okay? We got a whole set of rules about snow. And then, of course, there's the heat season. Okay? So these are all things that you need to understand before you decide that this is going to be what you need. And again, it is a business, okay? We're going to be talking about things like, instead of a budget, a cash flow, because you're going to have expenses that come down the road. So before you get into home ownership, we consider it, frankly, a victory. If we have a home buyers seminar and we explain the process of becoming a homeowner, and 5 people out of the 30 get up and go, I'm not doing this, because we have just saved you a world of trouble, okay? We believe in home ownership because it does, like I say, stabilize the city that we live in. So, again, we've got a bunch of information out here, core information and also information about resources. We're all going to be back next Wednesday, both in the morning and the evening, to get you more specific stuff about what courses when and where to go and phone numbers and all that. But this is just some basic information about things like the concepts that you need to understand as a landlord. The next thing we understand about preserving our homes is this is a physical act, not just a financial act, okay? One of the things I brought this evening is the seasonal home maintenance checklist, because as a homeowner, you now have a new hobby. It's called your house. And you are on a first-name basis with the people at Home Depot and Lowe's, because they greet you Saturday morning with, "Hi, what are we doing this weekend?" Okay? Okay? This is just a minor checklist of the seasonal stuff, not the big stuff that you might do when you want to renovate or rehab. Okay? And again, your community-based organizations are your partner for those kinds of things. We have the understanding for things like the Energy Star loans, where if you do energy efficiency, you get discounts on certain portions of the loan. It can get complicated, okay? So again, you want a partner who's vested in the success of the neighborhood, not the success of their business, all right? But again, the realities of home ownership, take a look, okay, before you leave. Because that preserves the physical aspect of your home, which, as we now move to talking about insuring your home, you need to do. Because let me tell you, the first thing that happens when you tell an insurance company that there's a problem with your roof is they go up and look at the roof, and if you have not touched that roof in 5 years or 10 years or 15 years, they are going to say, no coverage. You did not. You neglected your home. I have a friend who had, and I told this story last week, they have a co-op in Park Slope, okay? These are educated people, okay? Heads in a book all the time, I guess, because it never occurred to anyone that they had to repoint the face of their brownstone, okay? We finish it. It rained in through the bricks, and their insurance company said, you haven't touched this place in 30 years. No. So your responsibilities, you know, this is how you maintain the value of your home. Insurance is not for that maintenance. Insurance is not a savings account. It is for the unexpected event. And you have to plan on recovering. This is a phrase I used last week. This side of the room was here last week, right? Yeah, a lot of you. I recognize you. Insurance helps you plan to recover. And you, as I said, you're not going to get to a closing until you have your homeowner's insurance in place, okay? I brought a handout again for some concepts that you'll need to understand. But the most important one you need to understand as a homeowner going to purchase homeowner's insurance is that you are ensuring that you'll have enough money to rebuild the structure, the bricks and boards and pipes. You are not insuring the market value of the home. You are not insuring the appraised value of the home. You are not insuring the mortgage. And during the height of the bubble, well, actually, it's not even the bubble. Most of the people who come to me for an insurance review are overinsured on their structure and underinsured everywhere else, okay? Because intuitively it makes sense. My home is worth $600,000. I should insure it for $600,000. But that's not the way an insurance policy works. The way a homeowner's insurance policy works is that you have a certain limit on the structure, $440,000, let's say. Your house goes down to rubble by something that you're covered for, like an explosion, a fire, whatever. Not a flood, because that's not going to be on your homeowner's policy, and we're going to talk about that in a minute. Anyway, your house is in rubble. The adjuster walks up, and they do not ever write you a check for the face value of that policy. That is not the money you are going to get. That is the most money you could possibly get. What's going to happen is they'll open up an escrow account, put $30,000 or $40,000 into it, and as you rebuild the house, they keep giving you money until one of two things happens. You reach that limit that's on the face of the policy, or you finish building your house. And once you have finished rebuilding your house, they stop sending you money. So I had a gentleman in a few weeks ago who had a 2-story brick attached row in East New York, which, by the way, is the coming neighborhood. Don't tell anybody I said that, but it's true. It's gorgeous out in East New York. I don't know what they're talking about. It's tree-lined streets, single-family homes. I mean, come on, folks. Anyway, his house was insured for $778,000. You could build the whole block for that amount of money. Needless to say, his premium was well over $3,000 a year, okay? So after we had a little chat, he went back to his insurance agent, and I'm telling you, that insurance was cut by a third. I had a woman who came in, she saved $1,000 a year on her insurance because she was overinsured on the structure, because her lender said, but I'm lending you $600,000. That's a violation of state banking regulations. And it is so common that I know it by heart. It's banking regulation 38.9A. Okay? I have it in writing, posted on my wall, I hand it out, I email it, okay? This has been going on for about a decade and a half that I know of. I started this, never mind. Anyway, you need to understand how insurance works in order not to waste your resources on it. Because this is about building money and building wealth. What you really want to do is have enough money to invest. That'll build wealth. Your house is not a piggy bank, and your house is not, like I say, we're not going to play flip this house. So the long-term stability and functionality of your home is what we're going for here. That's with the home maintenance, that's with the insurance, so that you can keep the home in good repair, so it retains its market value, so that if anything awful happens to it, you will have the resources to repair it. Okay? The other thing that we really must talk about, especially to people who are considering buying a home and to people who already have a home, is we are a coastal city and we need to deal with this. Okay? I have not brought you the new flood maps and the old flood maps. I brought you a schematic of what may happen in the next 10, 15, 20 years. Because again, we're not playing flip this house. We're in for the count. So you want to know, when you're purchasing in coastal New York, what is it going to look like 5 years down the road? How long are you planning to live there? 10 years, 15? Okay? Take a look at your exposure to water risk. And if you look, the most important thing about this map is you will find risk in every single borough. I know it was Brooklyn that got hit hardest by Sandy, the coastal New York, Staten Island, Brooklyn, and the Rockaways. But let me tell you, the Bronx missed devastation by 6 hours. If Sandy had hit 6 hours later, it would be the South Bronx that would be 14 feet underwater. Okay? Queens, northern Queens, not southern Queens, Newtown Creek. Okay? Harlem Valley, they call it a valley for a reason. Okay? So be very conscious of where you purchase. There is a lot of information about the flood insurance. It couldn't get more complicated with with the changes in the maps and the financial realities of a flood program. It's $27 billion in debt. Okay, and what rates should we be paying, because we're paying subsidized rates that don't reflect the reality of the risk. And we've got a very important issue that is being worked on, and everybody in New York City has a dog in this fight, by the way, so you really need to get up on this. Way too complicated to do in this setting. But there are some basic concepts you need to understand, which is that you need to get a flood insurance policy now, not later. So that information is available to you, okay? Now, the other thing that we talk about when we talk about home ownership is building, is like I say, we're in this for the long term. We're talking about building generational wealth, all right? And that is why we want our children to, I can't read that from there. Give me a hand. Okay, all right. I'm old. I get a break here, okay? I'm so old, I remember when we rebuilt the South Bronx, by the way. So if anybody thinks that we can't rebuild coastal New York, take a look back at some of the pictures of what the South Bronx looked like. Okay, it was rubble river to river when I came to New York. And it is now, neighborhood of choice, as they say, right?
Yes.
Okay, so when we're talking about coastal New York, we'll get there. We're going to rebuild. We're not going anywhere. It's not going into sand dunes and salt marshes, I'll tell you that much. Anyway, generational wealth. Generational wealth means we prepare our children to understand financial realities, including the realities of our household, okay? People don't like to talk about money, but people will show you things on their body, but they will not show you their bank account, right?
True.
Ask yourself, okay, who's seen more of you that hasn't ever seen your credit card statement? Okay? This is how we are about money. We're going to be doing a course on this at NHS in the spring. I'll bring that resource next week. Anyway, so we want to prepare our children. We also want to use our homes as we age. This is our major investment. So what I'm working towards here is, how do we use the equity in our homes, not like a piggy bank to live off of, like people were doing in the 2004, 2003, but generationally. One of the things that one of the tools we have is the reverse mortgage. And again, this is the kind of thing where actually for an FHA, reverse mortgage counseling is required. And I have some basic information about reverse mortgages here. The most important thing, and the approach, of course, that we take at NHS, is that we want to do this as a generational counseling, so that you, as an older person, if you want to age in place in your home, you can use the equity in your home for your living expenses. No, the bank doesn't own your house any more than the bank owns your house when you have a mortgage, okay? You have a mortgage, you're paying the mortgage down. When you have a reverse mortgage, you pay the mortgage up, so that when you pass or when you want to transfer the house, there is a mortgage that has to be paid, just as if you died with a mortgage still existing. Okay? So we want to prepare, when you look at a reverse mortgage, you want to look at your generational issues. Do you want to leave the children this house? If so, then you want to be sure that they are included in the understanding of how a reverse mortgage works, and that there will be a debt on the house due when you pass, and are they prepared to take that over if they want to live in the house? Are they prepared to get a mortgage? Are they ready for home ownership? Is really what it comes down to, so that we get this generational flow of stability, of building assets, of building wealth. It really is the stability of the family and the neighborhood that creates success, not just owning stuff, okay? But owning stuff where we can live with peace and dignity, not worried every night about, am I going to make the mortgage? What am I going to do, you know? How do I get more stuff? How do I pay this credit card bill? So we have some tools here, okay? We'll encourage you to not only ask questions, but to come up and take the information, and, you know, drop by next week when we have more resources and actual, like, dates and times and places for you to come and get this work done. Okay? Thank you.
So thank you again to all our panelists. Thank you, Elizabeth, for always bringing it down and dirty, right? Giving us the lowdown on everything, and being very direct and to the point. Generational wealth is the goal, right? Once you achieve that home ownership goal, preserving it, and then being able to turn that into a legacy for your family. So not only thinking about the present, but thinking about the future. So that's why I start off by saying, when you decide to purchase a home, it shouldn't be a one-person experience. It should be a family experience. Everyone should know the pros and cons of it, and they should be involved in that process, so that when it's time to turn it over, if it's reverse mortgage or if it's just willed over to the next person in the family, that everyone is clear what the responsibilities are, and are able to keep going with that property, and not go into foreclosure or any other things that they, you know, losing the legacy in that property. So I'm actually gonna turn it over to Sandra, because she's gonna give us some fun things to do.
I get to do the fun part. So just to wake you up a little bit, I know you've been getting some great information for the last hour. So I thank our panel for coming through for us. Thank you.
Thank you.
So again, this week, and Patrick's not here, one of our Financial Education Committee members, and Imelba is one of them, Patrick provided us with gift certificates to Molson's Jewelers, $50 certificates, and tonight again, we want to thank Molson's and we want to thank Patrick. We have two $50 gift certificates, so Imelba, you will pull? Mm-hmm. Pull my name, Imelba.
No, my name is not in there. Your name is in there?
You don't get to be in.
Exactly.
Oh, sorry, panelists were not involved.
That's right, sorry. Here we go again.
Mm-hmm.
F. Aline Archer. Come on down.
Okay. Let's pull it
She
up.
did that.
Now we know she's got it, we can take her.
Yeah, right? Be financially savvy when you spend this. Carmen Calderon? Carmen Calderon?
No?
No?
Carmen?
Nope, Carmen not here.
Gotta be
Carmen
present.
left?
Gotta be in it to win it.
You gotta be in to win it because we have no address for Carmen. Leela Beccari? L-E-L-A? Come on, Leela.
Oh, we should have waited.
I want to tell you, if I could tell them, Leela is visiting us from Spain. Isn't that awesome?
Okay, take home a souvenir, get a New York necklace.
You would like to raffle it? All right.
That was nice of you.
Or we'll get you to pick. Oh, isn't that nice?
Very nice.
Leela is visiting. She is awesome, right? And she wants to volunteer while she's here. So guess where she's going to volunteer? Here at Borough Hall. Thank you, Leela. L. Bramble Lafton. Awesome. Thank you, Leela. So last week it was on this side, and now this week it's on that side. We do share the wealth.
Yeah. Right,
Congratulations.
that's true. Yeah,
Congratulations to both of you.
Okay.
Just so housekeeping before we go into questions and answers. If you do not have an evaluation, raise your hand. If you came in a little later, we will get them to you. And so we're going to start collecting them because we're at the end of the session. You can go ahead and rate the panelists, please. So if you can complete this so that we could get that out. By a show of hands, how many of you are here for the first time? So Mike, if you would get these evaluations out. I'm sorry?
This series.
This series, this week is the first time the last 3 months. We have one. Okay. Keep your hands up for those who are here for the first time in the Survive to Thrive series. Keep your hands up, Mike will come to you. Yeah, keep your hands up.
Enough. Have you got enough?
Keep your hands up. I have the information. She's not looking at it. Now this is the first time any of our workshops. If you were here to the workshops before, so we might give you one.
Yeah. That's about the flood, okay.
So we're doing Q&A, and then we'll get the handouts
training.
after.
Take it before
Yes,
you sign.
please.
Wait for the handouts. We're gonna give them out. We'll give them out with a Q&A. Mike, the lady in the red. Okay, how many? All right.
Okay.
2? Okay, so we're good. And so now those who didn't get the evaluations, put your hands up so we can get that to you. Questions for the panel? Question for the panel, just wait 1 minute.
I'm going to break this before I know this. Oh, well.
All right, so everybody's got an evaluation in their hands? Thank you, Mallory. See, we put our sponsors to work as well. We put Melba to work as well. All right, it's just so quiet this evening. What's going on? The questions and answers out. I know I'm tired, but I am. I was up since 6 o'clock.
All day
I was out digging dirt all day.
Yeah.
Okay, so as we get into questions and answers, because I see we're anxious, we got you. If you finish the evaluations, put your hand up and we'll come around and collect it. All right, I'm going to give it back to Emelba. Oh, Mike went to yeah, I'll do it.
Y'all can do it if you want.
Oh.
All right, so as we wait for the wireless mic, just start percolating the questions. Okay, so first question, go ahead. All right.
Thank you. My question is basically for Mr. Cleavers and also some other members of the panel. Mr. Cleaver, you said that when you do repairs on your home, to include the cost when you go to your accountant. I was under the assumption that if you're a private homeowner, that's applied to the basis when you sell your home, and the only time you can deduct is if you're a landlord or if you're the expenses were for something that's energy saving. That's my first question. And my second question was some of the panel members mentioned training classes and that they're free. There's an ad almost every day, multiple times on WINS for preparedness to own a home for $99. Could you discuss the proprietary or the pay courses as well as your courses that are free? Thank you.
I can't hear you.
So the first question you was asking me about repairs, can you put them on taxes? That's what you was asking?
Yeah, right.
Yes.
And I had said I was under the assumption that if you're a private homeowner, you cannot deduct or even capitalize on expenses until you sell your house. And the only time you can deduct expenses, normal expenses, is if you're a landlord. Could you expand upon what you said?
Okay, what I was explaining to you, as a homeowner, when you do repairs on your house, keep your receipts because you get taxes are deducted because you're a homeowner, and it's all about how the accountant itemizes your taxes.
Speak to your accountant on that. What you say, Angela? Is that true?
And unless you're a two-family homeowner, then you can deduct the repair.
Yes, no. If what I'm trying to, once you do repairs, keep your receipts.
That's right.
And your accountant should know about itemizing your taxes. Because once you do taxes, is a sheet in there talking about, if for a homeowner, it's for itemizing your taxes. Because you notice,
Say that's for 2 to 4.
huh? The Schedule C, actually, it's the Schedule C.
For 2 to 4 family.
2 to 4 family homes, I'm sorry, yes. 2 to 4 family houses, when you're a landlord, yes.
She just want to clear that up. That's right.
And anyone heard the one on Mint that is $99?
See you.
Okay, there's a couple of, I'll take that if you don't mind. Okay, NHS has always believed that you should have some skin in the game, by the way. So our home buying education courses were never free, because we figured if you can't come up with $100 or $150 to take an education course, then you can't afford to own a home. And secondly, if once you pay $150 to go to a class, you will actually show up. Okay? Because you're not going to get, because you're taking a place that, so, and again, it doesn't cover anything like the cost of counseling. I have to say that. We have counselors that work with people for 2 and 3 years. Okay? This is not a one-shot deal. Okay? Where you come in and you get some kind of a list and then you're sent off to get, for good luck. You end up with a relationship. So our position has always been, we want you to have skin in the game because we're committed. We want you committed too. Now, there is a HUD-certified way to take homeownership education on the internet. It's called eHome, and I'm pretty sure the fee is $99. But like I said, personally I prefer face-to-face, but eHome works for a lot of people who like to do that kind of internet learning. Okay, so. That's what we have to say about what I have to say about fees. Okay. Thank you.
My name is Valerie Crossland. Just one comment on the statement you just made to the person just now. I feel that was an unfair statement because most people are living check to check, just paying their rent. And all their other expenses, car fare and food. They barely have money to do anything else. So it's not that they don't have they don't want to spend $150. They really don't have it.
Well, see, this is the thing. This is why financial education and the credit counseling and the financial literacy counseling are usually free, okay? Because then you can start to build up your financial life, okay? But if you are living check to check, okay, you're not ready for home ownership. You need to get into a financial position where you have some wiggle room in your life, okay? And again, by going through the financial literacy courses, which are usually not a fee-based course, because we know this is where you're starting, okay? That's what I would say about I can't afford to do this. We want you to move forward. There are ways to move forward from where you are. But we don't, again, one of the things is the financial education certificate, the HUD HUD certification that you have to qualify for the down payment and closing costs. HUD specifies it has a lifespan of 12 months. So if you were 2 or 3 years away from purchasing, okay, we're not going to put you in that class. Because you're not ready. So we want to start with you where you are. And yes, we do understand that where people are is living check to check. And that's why the financial literacy class, which would be not a fee-based class, would be where you would start. Okay?
That's more of a conducive answer.
Yeah. Well, we never say that you can't own a home,
Right.
okay? We say that you can't own that home today because you don't have the money to buy it, and I don't care what the real estate agent told you, okay? Those are optimists. We're realists, and that's why we really will start where you are.
And this is why we've been holding these seminars, and we've held the home ownership for last. The first seminar in this Survive to Thrive series was budgeting, credit and credit cards, just to build you to get to this point so you could get this information. By no means this is going to be the last seminar that we're going to have. Certainly we want to take that budgeting so that people with questions like yours will know where the starting point is.
Yeah,
and that starting point is being able to change your lifestyle of spending and learning how to budget well.
Yeah, on that flash drive. Did you get a flash drive?
Yes, I did.
On that flash drive is a great budgeting tool. Okay?
Right.
And it's interactive, so you run it onto the computer and you'll start to fill in your stuff as you look at your credit card statement and your bank statement and you figure out what you really are spending, and it'll become clear where the wiggle room begins.
And so
Okay.
that same flash
That's
drive
a
that
tool
we
to
gave
start with right
you
now.
at the beginning of the seminars, as Beth said, had the information on how to budget. Those who got them this evening in the bag does not have that budgeting worksheet. If you would like to have, because we didn't have enough prepared, so see me after. I will definitely get you that information on the flash drive, because it is important that we give you that information. It is the starting point. It is the starting point for you to change your life so that you could get to this results. But like I said, this is by no means the end of financial education seminars. Although you may have missed the budgeting and the credit cards and the financial planning, we do plan to host those throughout the years. It's not going to be every August.
And we'll have the resources here next week, too, to stop by.
Thank you. My question now, because I just back off the other link. I'm with DC 37, Local 1549. They do have, on the 30th, they're going to have a homeowners also training for free for their membership. My situation right now is the rent is very high. So I joined their housing committee. In joining their housing committee, I'm looking for a place now, and they're like, well, opt into opposed to paying an astronomical amount for rent, which I can't afford, do a condo, co-op, or townhouse. So even though I do have money saved in my deferred comp, and I do have money saved right now, presently looking for a place, an apartment, I still feel like my income is not that high. I don't gross that. My net, as the gentleman put it, bring it home is not that high. So what do you do in that case? I don't want to invest any more money at this juncture of my life into rent. I'd rather be owning something opposed to paying all this money into rent.
check with the guy outside the door at Habitat for Humanity, for one thing, okay, for sweat equity.
Have
okay?
you
So
been
he's-
pre-approved as
he's-
of yet?
He's gone, but his cards are outside.
His cards are outside, okay?
Have you been pre-approved? So you don't even know how much you can afford. That's where you got to start at. You need to go sit down with a lender to find out what they approve you for based on your income, and then that's how you determine how much you are able to pay.
Is Mallory here? So maybe you could see Mallory before you leave and have a quick conversation with her about pre-approvals.
Right, the bank.
Hi. So I'm assuming ideally to purchase a home, you would need Bridge Street support and I guess a real estate agent and an attorney is my assumption. So do you guys do anything in regards to legal counseling or partnering with local attorneys to help?
What do you mean when you say partner?
Do you have a list of attorneys you work with or do you guys provide legal counseling in regards to
Well,
home
yes,
owning?
we do. We do have attorneys that we're partnering with that we can refer you to. We do have a list of inspectors that we deal with. Everyone we deal with, we partners with. So it's like a group of us that works together.
Yeah.
Yes, it's our home. Bridge Street has a home buying team. So.
And on next week, Wednesday, the Financial Expo, all of these organizations here and other organizations that do financial planning or financial education or financial literacy, whichever we want to call it, will be here next Wednesday in the morning and in the evening. You don't have to stay all day. You can just come and get the materials, speak to someone, and go on to work or home.
Yeah, building the team is one of the things that a community-based organization, NHS, Bridge Street, this is one of the things that we are very strong on because we do make connections in the neighborhood. We don't have, Clarence asked about partnerships, we don't have any kind of fiduciary relationship with these people, okay? And of course, you're free to pick anybody you want. But we do know, and we bring them in for speakers so that you get to meet them, actually. But yeah, how to build a team that's on your side. Because one of the big problems with the bubble was the one-stop shop. Okay, you come here, sign here, and I'll have you closed in 2 weeks because they'll help you with the lawyer, they'll help you with, they'll do it all for you. Yeah, they did it all to you. And now you're in foreclosure prevention. You know.
Good evening.
It's always a good one. I love it.
You can quote.
We heard you earlier say that it's almost at the same impasse where rent and mortgage, it's just probably $100 difference in most places. We've also heard Beth talk about building generational wealth, which means that when we own a home, we are able to pass it on and build communities. Now, for some people, we'll never be able to, quote unquote, afford the home. We're not ready yet. But we're paying a rent to somebody else, which is almost the equivalent of a mortgage. When and how are we going to change that bar where we have people like Habitat for Humanity make people who are paying these exorbitant rents be qualified to rent to own? Why aren't we building these apartments and condos that you can move in, you're going to pay a rent, but at the end of the day, at some point in time, you're going to own it as you own your own home? Because that's the only way for us to now say we are leveling the playing field, because as my sister said just now, we're living paycheck to paycheck, and we don't have a lot of wiggle room. So for those of us who will never be, as Beth said, ready to own, but we're still paying the same amount as somebody who's owning, how can we fix that?
Well, I know Bridge Street does.
Yeah. Development.
I mean,
Development Corp.
well, I know Bridge Street does have some properties that you're renting, some down the line, you eventually become a homeowner. We do have properties like that. And coming to these classes will help you, put you in a better position to this little wiggle room. To come into these classes will help you educate yourself to have more than a little bit of wiggle room. We'll help you try to control spending, how to save, where grant monies are, to help you get started. There's a lot of grant money that's out there to help you.
And I just want to piggyback on what Karen says. I think that's part of communities getting involved, right? Get involved. Voting, speak to these politicians. Mayor Bloomberg, Mayor de Blasio is doing this whole rent stabilized apartments because the focus is rental because New York City is the city of renters. But those are conversations, right? Those are conversations we have to get involved as people, have to get involved and stop, not doing anything about it. Get involved and says, what about condos? Why are we doing rentals and not condos? Why we don't have more condos and co-ops in the city? So those are conversations also.
So we all want to add to it. I'm just going to add something, and Sandra is, just to answer your question. Another thing is, a lot of programs like HPD, right? They have a lot of lottery programs. Right now, Pratt Area Community Council, which is one of our partners, they have, they're selling condos, right? It's a lottery process, but if you look on HPD's website, they have a lot of affordable houses, with mainly condos and co-ops for sale at a below market price. But you have to be, this is a discipline, and you have to be innovative and creative in all of these, in this process. So it might seem like it's a challenge. It might not happen tomorrow or next year. It might take you 5-10 years, but it's a matter of the discipline and being able to work with what you have now. But I know Sandra wanted to add something. Sorry.
So that's it, because I've been saying the same thing every week. It's a lifestyle change, isn't it, Melvin? Yeah, so I was waiting for you to get to it.
Sorry, that was my time.
Go ahead, say it.
So it is a lifestyle change, and it's a matter of, like I said earlier, right? We talked about everyone comes into this class by themselves, or they come to these workshops by themselves, but it's a family affair. We've had many a times where people come into the workshops and like, I have children, or I have these types of things. Have anyone sat down and had this Sunday conversation, around the table for dinner and said, okay, well tonight we can't buy these sneakers. We can't go to these certain things. We got to go to the bare minimums. Why do we have 20 channels or 100 channels for cable access? We need to go to the basics. I'm not saying that you're not there, but I'm just saying we need to go to the basics and say, what are we doing to survive? What do we need to survive? It goes, thank you, to strive. It goes back to what Clarence said. When you're buying the house, it's not about your wants. Oh, I would like to have a 2-car garage, a pool, and blah, blah, blah. No, what do I need, right? I have a family of 4. I need 2 bedrooms. So I need 3, whatever it is. But being realistic and being able to make the change, because you can't buy a house and still want and buy and have the car note for $700, get your nails done every 2 weeks, get your hair done, get this, get that, all those other things, go shopping, whatever it is that you do that's a vice that doesn't change your behavior and your lifestyle.
We were actually talking about people who are living literally paycheck to paycheck without the frill, without the cable, without the mail.
But it's also being innovative. It's also being innovative. There's place, sometimes, and I'll take 1 second. Sorry. Single parent, I came from a single parent household, right? Mother worked weekends, nights, and everything to be able to maintain her property that she bought on her own with 3 children. I'm not saying everyone's story is going to be the same, but we had to squeeze and do all types of things and extra hours here and, sell this there and whatever other garage, whatever it was, so we can save the little monies that we had to continue to maintain and to build. So I'm not saying it's not easy.
You see, this is where Beth comes in when she says, when we are buying, we're building communities. Because at the end of the day, when you have a mother who's working 2 and 3 jobs, she leaves those kids undone, and it breaks down the family structure. So she's still, we still paying that mortgage or rent, whichever one it's classified at, but it's still $2,000 plus.
Right. But it's a sacrifice, right? It's a sacrifice, and we either make that sacrifice or we don't. But one of the comments I heard is that we can't have a home. We can't. Some people may not. Don't ever say never is what we teach our kids. Don't ever say never. There's nothing that says that you can't own a home. Like Imelba said, it could be a small home. You start small. I started smaller. You start and you build. Yes, we've got people living from paycheck to paycheck, but those people who are living from paycheck to paycheck, us who are living paycheck to paycheck, we do go to the movies at times, or we do go to McDonald's. So I'm saying you've got to give up something. The lifestyle change is what we coined it when we started to talk with our partners. Melba, thank you. We have to have that mindset of where we want to go and how to get there. And it's all up to you. It's up to Beth. It's up to our panel to get you there. So we're going to take our last question, and then we're going to go into closing remarks and networking after. We're going to give you about, another 15 minutes of networking. Last question.
Hi, good evening. My name is Lorraine Gamble Lofton. I'm a Brooklyn native. I own my own home. I've always been, since I was 3, I've lived on Putnam Avenue. And my mom came to this country in 1950, and between she and her sister, they got one house, and they worked it through from 50 to 57. And then my mom got the house on Putnam Avenue to help bring other family members here. And they worked their way through to their home ownership. Right now, I'm struggling. I've been on my job. I work right across the street. I've been working for the Department of Finance for 33 years. God willing, and the creek don't rise, I'm out July 17th.
Amen.
But, I just want to say it's difficult for everyone. You may see a landlord and think like, oh, they're just living off my money. Baby, there are days I don't know how I'm going to have oil, how I'm going to have food, how I'm going to have whatever it is, But you maintain. I haven't been on a vacation. I don't even know what that word is spelled like. Okay? But there's things that you sacrifice. So you talk about nails? They're not done.
Nobody here has decent nails, okay?
There are so many things. What I'm looking for right now, I don't think that this was the right one for me tonight, because what I'm really looking for is some help with what I have, how to put my home back in order. There are things that are broken down a little here and a little there. And my mom had a stroke last year, and she's in a nursing home, and I'm an only child, and I'm 60 and trying to, none of this is easy. So don't ever think that just because you see people, to know me and to live with me are two different things.
Yes.
Okay? So keep fighting. Yep. Keep fighting. And don't look at that other person who has something as the enemy. Yes. Okay? You don't know what they're struggling with. You don't know the tears they cry at night.
Yep. Thank you for that. Thank you. And it's well said. Well said. All right, so we're going to call Angela Cummings from NHS. Ma'am, you said that this might not have been right for you, but networking works. NHS, if you need information on repairs, please, can you just wait for a minute?
Repairs,
ladies,
we do
ladies,
repairs,
give us a
all
couple
kinds of
minutes.
repair stuff. Yeah, go ahead.
NHS of East Flatbush and NHS of Bed-Stuy, they give low interest loans for repairing your home. You're talking about repairing your home. Connect with NHS. There are different programs that you can get low interest loans based on your income. All right, we're going to wrap it up with Angela Cummings from NHS of East Flatbush.
Okay.
Okay, good evening, everyone. It's my job. Again, my name is Angela Cummings. I'm from Neighborhood Housing Services of East Flatbush, and it's just my opportunity to say thank you to everyone who've attended. It's so good to see so many people. This is the last in the series of our financial literacy series. It's the first time I'm here, but it's good to see so many people have been here for all 4 of the seminars. And this one is about achieving and preserving home ownership. And thank you, Sandra, for reminding this group that we do provide also loans, not just what was discussed here. So yes, I'd just like to thank the board president for joining us today. Thanks Sandra for hosting and for organizing this whole event. Let's give her a round of applause. Thanks. And I'd like to thank the panel today. thank Clarence for his reminder in home ownership that there are advantages and disadvantages for being a homeowner, and we should consider them both. You being here now, remind yourself that you need the information in order to become a homeowner. I think that's very important. I'd like to thank Masana for her information on foreclosure, and to remind you that we as the Neighborhood Housing Services and also as Bridge Street, we're here for you. So if you have any questions, any concerns, this is where you should come. You should come to us for all those questions. And also to Beth, we want to thank Beth for her presentation on the reason why we are here is so that we could help to stabilize the community. A stabilized community means that we may have stay longer in the community, as well as lower rents or probably lower mortgages.
Yes.
So we appreciate all the information. I know everybody's up here getting some, so that's very good. If you have any questions, feel free to come and ask. And if you're not able to come right now, you can always give us a call. We have our numbers here. But again, thank you very much for attending, and we look forward to hopefully seeing you again sometime in the future.
Thank you.
You could ask Angela, you could ask here, because yes, you do need to.